Good afternoon, everyone. I'm going to talk to you about Blackstone Minerals and our Tarkwa project in Vietnam. I came here 12 months ago and I gave my first presentation on the topic. We have since then nearly completed our definitive feasibility study. We are progressing our permitting process, and today I just hope to give you a bit of a taste about what we're doing. If anyone wants to learn a bit more, come see us at the booth. We'll go through it in a bit more detail, but there's a lot to go through, and so yeah, I'll try and keep it at a high enough level that everyone can follow along. Just firstly, a bit about Blackstone. Blackstone is ASX listed, but we also have an OTC code of where we're also listed. Current market cap of about 30 million Australian. Our top 20 shareholders own about just under 64% of the company, with our board of directors made up of Scott Williamson, who's a mining engineer, Hamish Halliday, who's a geologist, Dr. Frank Berlin, who's a geologist as well, Alison Gaines, who is specialist in corporate governance, and Dan Locker, who's a mining engineer and also the ex-managing director of Western Areas, a West Australian mining company recently purchased by IGO. So this is our project in the north of Vietnam. We're looking to develop a fully vertically integrated nickel mining and refining business to produce nickel PCAM, which is a precursor to the lithium-ion battery. It's made up of two parts of the project. There's the mine, the upstream, with a 130 million tonne resource at 0.39% nickel, 485,000 tonnes contained, and a downstream refinery producing the battery products. Key aspects of our strategy is being the integrated developer of a low-cost and low-carbon nickel product. Low carbon means 9.8 kilos of carbon for every kilo of product. We'll talk a bit more about the relevance and the significance of that shortly. And the integrated mining all the way through to refining lets us keep our costs low. No one really wants to know about nickel right now at the moment. It's a horrible market, but the main issue is cost. And we're in Vietnam and our mining costs are very low, our refining costs are very low. So even at these depressed prices, we're a very economic operation. So this is our overall business strategy. We're currently looking to develop a mine in Vietnam, which is the Tarkwa project. We've purchased an option over the Waboden project in central Manitoba, and the plan is to bring both these mines together with some of our other strategic investments to the refinery in Vietnam. Now, this will take about 46,000 tonnes per annum of nickel, and so we're looking to feed about 50% from the mine in Vietnam and the rest to come from international sources. We're currently in a partnership search. We've engaged a global investment bank, Jefferies, to help us find a partner. Now we're looking for strategic partners and local partners. This is the overview of our project. This is in the north of Vietnam. We have up here to the northwest, we have the mining project, and then following the river to the south, we have the Tarkwa refinery. Now we intend to use this river for access for concentrate from the mine to our refinery, and that river extends all the way down to a port closer to the main port of Hanoi, and we'll use that to bring our third-party concentrates and feedstocks all the way back up to the mine. This is recommended by the local community and government. It's the safest means of transport in the area and also very low cost and with low impact. We'll talk a little bit about the refinery. So this is our DFS design for our refinery. We have two trains in operation here. We have the first train which will be developed, and the second train is identical to the first, but it gives us the optionality to stage our development. We can potentially, each train will produce about 23,000 tonnes of nickel, and we can look to stage that, where we maybe only build one train and just the back end of the other, allowing us to import third-party MHP rather than just relying on concentrates. This location was selected by the local community. We work very closely with the Vietnamese community in this area and had very little impact, and so this was recommended and adopted by Blackstone. Now coming back to the costing, so to really be viable long term, we need to have low costs, and the cost curve on the left here really demonstrates where Blackstone sits, right down in this bottom quartile. Current cost is about $13,000 per tonne, which is still far below the current nickel price, even though the current nickel price is considered to be very low and very depressed. It gives us great opportunity as the nickel price is seen to probably increase again by the time this project is operational in the back half of this, at the end of this decade. Now, how do we get to the low costs? I think being in Vietnam is the key. We have access to low-cost hydropower, which is 6 to 10 cents a kilowatt hour. We also have low labour costs at about $3 per hour, which is half of that of China. We also have very favourable incentives from the government. Those incentives are basically no tax for the first 4 years and only ramping up to 20% tax after 15 years. A lot of other benefits as well, but we can go through them if you would like to come have a chat at the booth. It's not just low cost though, so a key focus of our strategy is low carbon. Now, earlier I mentioned that the Blackstone project will generate a product with about 9.8 kilos of carbon for every kilo of product. The significance of that is, if you look at some of the other competing processes globally, we are sitting with the lowest carbon footprint flow sheet to make this product. If you look at a conventional nickel sulfide project in Australia using a smelter, you'd have probably about 15 to 16 kilos of carbon for every kilo of product. Looking at Indonesian HPAL, the cleaner side of the Indonesian nickel, you're still looking at about 22 kilos. But if you consider the conversion of nickel pig iron through the rotary kiln into the class 1 nickel, you're looking at about 60 kilos for every kilo of product, which is obviously much higher than we're currently looking. We're also looking at ways to bring that further down to 1.4. I won't go through these now, but it's a clear strategy that we have, a very viable approach, and we're looking to bring that down as low as we can. One of the ways we want to do that is also having a very flexible feeding strategy. We obviously will bring nickel from our mine in Vietnam and then what we want to do here in Canada, but we're also able to feed in mixed hydroxide precipitate from other operations globally, other third-party concentrates and nickel matte, all of which we can bring to our refinery. What this means is we can look for what the cheapest source of nickel is globally and make sure that we are selecting the cheapest nickel source at any point in time to try and maximise our returns. Okay, we'll talk about the mine. The mine is in the north of Vietnam. We have about 25 advanced stage nickel targets. We completed a pre-feasibility study in 2022, and this is the outcomes of that study. We had an open pit mine and a processing facility for 6 to 8 million tonnes per annum with an integrated waste storage facility which included both our tailings and our mine waste. We then had a port. We would take the concentrate and ship it down to our refinery. 4 main resources made up this study. We had Ban Qua, King Snake and Ban Chang, which are the smaller targets, but the primary target was Ban Phuc. Ban Phuc is a disseminated nickel sulfide, and since we picked up the project in about 4 years ago, we've put about 100 kilometres of drilling into the target. So we've defined this very well, and it's generated our resource. So our resource is about 123 million tonnes for Ban Phuc at about 0.37% nickel, or including the byproducts of cobalt, copper, PGEs, gives us a nickel equivalent of about 0.43. Now, as we look towards the end of our study, we ended up with an overall mining inventory of about 65 million tonnes at 0.41%. This gave us an overall nickel mine of 260,000 tonnes. The opportunity is there to increase this further, but we're continuing to look at lowering the cut-off grade through lowering our marginal cost to produce. As we're looking into our definitive feasibility study, we completed a 1,000-metre development drive through the middle of the pit. This drive has given us about 4,500 tonnes of ore, but we've put through an existing concentrator on site to really pilot this and have a really good understanding about how our recoveries are impacted by grade and the different zones we have in the ore body. This has given us great confidence over how we're going to operate this as we go forward. This is just the design for our plant. It's a pretty conventional design with crusher coming through to milling, concentrating down to filtration at the bottom. We'll take that on a truck to the port. Oop. Do that again, sorry. Let's take that on a truck to the port via truck, and then from the port, it follows the river all the way down to the refinery. Don't have time to really go through it today, but happy to talk through it a bit more. But we've been looking at global targets for really where we want to find additional nickel to fill the second 50% of our refinery feed. Our focus has been in central Manitoba. We think that the medium grade projects with 0.3 to 1% nickel are key, with the larger low grade projects offering long-term production but at very high capital costs. with the smaller high-grade projects not really giving us the amount of nickel we require to have a meaningful contribution to our project. I'm going to have to wrap up, so I'm not going to be able to really talk to this project, but it's a very exciting project, what we've got in Woboden. So if anyone would like to hear a bit more about it, you can come to us at the booth and we'll have a chat. So in summary, Blackstone is a vertically integrated mining and refining business focusing on jurisdictions with hydropower. We have globally relevant nickel mineral sulfide resources across Vietnam and in Canada, first quartile cost position with the lowest carbon footprint. Partnership-based model where we're currently searching for our partners and looking to secure those in the near future, and delivering a nickel strategy in a current low nickel market, but into a rising nickel economic market towards the end of this decade. And thank you for your time.